All right, as we venture on and keep a close eye on your market activity ahead of tomorrow's supply and demand reports, let's take a close look at our prices right now provided by Bar Chart. We'll begin with the corn, and on the corn, we'll go with September for the contract to focus on. And right now, it's 4 cents higher at 4.96 1/4. Got close to $5 last night, got within 1 tick, couldn't take it out. December, 3 3/4 higher at 5.03 1/4 right now. In soybeans, you currently have August 12 1/4 higher at 14.67 3/4. Sounds good, but it's 15 cents off of its overnight high, so it gave back a lot of ground already. November, 12 higher, and it's at 13.57 1/2. Same story there. It's off of its earlier high by roughly about a dime right now. In the wheat in Chicago, September is gaining 12 1/4 cents. We're at 6.58 1/2. So we're back within about 4 cents of our high of the day. We've had roughly an 18-cent trading range here on the wheat. In Kansas City wheat, we have September 13 1/4 higher at 8.24 1/2. So we're getting closer to the high of the day than we were our low. We're kind of moving away from that low now by 14 cents. Spring wheat trade in Minneapolis, September up 13 1/4 at 8.63 1/2. And in our cotton market, we have new crop December currently at 81.73. Well, they're taking the spurs to it now. We're up 248 points on the day. We have Brian Hoops on the line with us. He is with Midwest Market Solutions. He's in Springfield, Missouri. Brian, of course, we've been talking all morning long about the WASDE report, the supply and demand report that'll be coming out tomorrow at noon Eastern time. And of course, we'll have live coverage right here when the numbers all hit the wire. I want to take a look at some of the early estimates on the crop production. And I assume maybe you were actually included in the survey. I don't know, but this is a survey compiled by the Wall Street Journal. Let's take a look at what they expect to see for corn and soybean production here in the U.S. So for corn production, the average trade guess is hovering around 15.15 billion bushels with a yield of 175.8 bushels per acre. Now, remember, USDA thought it was going to be over, 181, I believe, earlier. So now the trade thinks they'll trim quite a bit off of that. The trade expects soybean production to be 4.25 billion bushels on a yield of 51.4. So were you included in this survey, Brian, or how do you think those numbers shape up to what you're thinking?
Yeah, Marlon, we are included in that survey, have been for some really long time, and I think I'm pretty close to what the average trade guess is going to be. Probably a little bit higher on the corn and on the soybean yields. Now, I don't think the USDA has actually changed corn yields in this report since around 2012. But they certainly have a lot of room to make an adjustment in this report. Even if they drop yields by 5 bushel an acre, you're still looking at any stocks well over 2.1, 2.2 billion bushels of a carryout. And I think that's why they will make that adjustment, is there is so much flexibility in this balance sheet right now that they need to drop these yields. You look at Illinois' crop ratings, even after a week of some rains, still only 39% good to excellent. Iowa did not improve last week despite some rains in a lot of areas. So there's still some key states that are very concerning here. And if you look at the soybean numbers, I think it's unlikely USDA makes a major change in production in this report. There's a lot of the growing season ahead of us yet. So I think they're probably going to keep things unchanged, maybe a small decrease in production, but balance sheets there are much, much tighter, and they have very little incentive to make them even more tighter with a change in the yield numbers. So I wouldn't be surprised if USDA just left soybean yields unchanged. Balance sheets are going to tighten and be fairly snug over just a little over 200 million bushels. But then the corn number, there's a lot of room, a lot of flexibility for them to come down in subsequent reports. They don't have to drop it all this month, but I think they'll probably drop at least 5 bushel an acre.
So the market seems to be taking the stance that they'll really trim the soybean production quite a bit. You talk like maybe you don't expect to see that. Is that something that could come back to bite them?
Yeah, I think it possibly could if we have the right weather conditions going forward here. during the month of July into August. They could make those adjustments after they see some of that weather in the next month's report. Again, I think if they do make a yield adjustment in soybeans, it's going to be very, very minor. They're going to prolong that because the balance sheets are already going to be tight, as we planted a lot less soybeans than what the trade had expected and what the USDA said just a month ago.
Okay, we'll take a look at livestock trade in just a moment. Our guest is Brian Hoops. We'll be right back. Back with you with our livestock trade. Let's take a look at live cattle futures this morning, and we'll see if they're rebounding off their earlier lows. They tend to do that quite a bit here lately. Let's go to the big board. On our quotes from bar chart, August is still down 22 cents. We're at 176.97. So, they're still kind of in the middle of our trading range today. They're within about 20 cents of our high of the day. October unchanged at 179.95, so maybe just a little bit of lifting off their earlier lows here, but still very quiet trade. The ranges are not very wide at all for cattle, and that's kind of odd in itself. On the feeder cattle market, you have the August now 42 lower at 245.82. And you have September down 55 cents at 248.92. All right, let's move on to the lean hogs, see what they have to offer today. We have August up $1.07 at 95.25. Well, how about that? It's 90 cents off of our earlier low. You have October up $1.22 at 82.40. That's just a dime from our high of the day. Let's go back to Brian Hoops and see what he thinks about this. A little bit of strength showing up in the lean hog trade here today. Brian, what's that about?
Yeah, we've been down, I think, 3 days in a row here. We rallied on Thursday into some resistance, closed lower. And that was, technically weak, followed through on Friday and again on Monday. It's a turnaround Tuesday effect, I think, in this hog market, just getting a little reprieve. I don't think we took out the previous session lows, and that the fact that held gave us that reason to have a little bit of a bounce of short covering. The cattle market is still kind of searching where this cash trade is going to develop. The show list numbers that came out yesterday afternoon, a little bit larger than expected. We're looking at about 245,000 head on the show list, an increase from the previous week, and that is seen as a little bit bearish. The cutout values have been falling pretty sharply here recently. The slaughter pace is picking back up, so margins are being squeezed. They're about $30 a head profitable right now. That means that they probably won't be killing a lot of excess cattle with slim profit margins. So we look for a cash trade to be really no better than steady this week.
Okay, well, I appreciate you offering that up. Thank you, Brian, for all the information. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri.